Well, inflation comes in red hot, StreamYard's down. Apparently, they're going to postpone the rate cuts maybe till another month. Got a lot to get over today. We're just going to talk about some TA stuff. I'm going to be by myself. So we're going to get into it all on today's episode of Money Never Sleeps. Welcome back to Money Never Sleeps. Before we get into anything, not a financial advisor, nothing I or anyone else on the show says is financial advice. Just a couple of guys love talking about the market, and we're excited to talk about the market. If you want to do any financial trades or anything like that, do your own research. It's on your own volition, and speak with your own financial advisor. So that just has to be said. But welcome back to Money Never Sleeps. I am by myself today. We'll be back with the full team tomorrow. Jweb and I will be together, and we're having problems with StreamYard. So I'm just doing a quick little update on the markets, considering we had some hot inflation today. The question is it misleading? So we got the print that it came in at 3.5%, and that's I believe year over year, and we're also seeing that it's month over month 0.4% up. I don't have the numbers pulled up because I am not the inflation guy. I just talk about what I'm seeing in the reports. But JWeb will have those numbers up, and we'll get into, we'll compare it with the PPI tomorrow. But what I did see is that shelter and also energy continuing to be an issue for this market. I want to see the PPI data tomorrow. I think that's going to be the most important because we're going to tell if consumers are going to end up being forced to pay more because producer prices are increasing. If that's the case, then you have inflation. Then you could have stagflation. Then maybe it warrants higher for longer. I just don't necessarily believe that it's higher for longer when the majority of the reports are being made up by energy, which is primarily driven by the sector itself, the industry itself, cutting oil, also just problems that we're having globally in terms of conflicts and wars. And then you look at the other hand of it, which is just housing, and it's like that's the problem itself is the reason why the rates are high, right? So that's causing a huge squeeze on the price of these homes, and eventually it will break, and shelter will break at some point, but it's just not here, and it's not going to help if you continue to believe that these rates are actually doing things that are beneficial to the economy at this point, right? So they will eventually come down. The problem is it's probably going to come down in the worst possible scenario, which would be mass unemployment. So that's just a few things that we should keep an eye on when we talk about some of the inflation data and the importance of understanding how that data should be interpreted versus how markets will, go off overboard and just absolutely react to it in the worst possible way, which honestly kind of warrants it because inflation is higher here. But at the same time, I don't believe that this is a scenario that's going to keep us moving forward. We're seeing Jim Cramer even say the same thing I'm saying. So maybe I am wrong and maybe this is higher for longer. I don't necessarily believe it is, though. And I do think that we are on a race back to zero because eventually something will break. We know that rates being high and people continuing to believe that we're going to see rates higher for longer. The banks are just crying at those words right now. They have to issue debt. I mean, I would assume that the administration probably wants them to be issuing debt. I did see that the president did make a statement today about how rates will be the rate cut may be postponed about a month or so. So I thought that was an interesting statement. We'll see what comes of that. But let's get into some of the stuff, how the markets are reacting. I'm gonna pull up the S&P right now because the S&P is absolutely having a dismal day. We're taking a look at this in the S&P right now. We're seeing that it's getting close to that 50 moving average, right? We're down about 1.19% today. It's down 62 points. Now, this was down way more. It was down about 90 points in the futures market, in the pre-markets. I don't, let's put it this way with this. I, for the, and it's probably stupid of me to be up here, but I think that there's grounds to say that there's a potential squeeze coming in the next week or so with OPEX. And does it have to? No, absolutely not. It's just what I'm seeing, right? So the thing that I'm seeing more than anything is that we've seen some pretty significant sell-offs. We had a great sell-off here last Thursday, really good sell-off here. And then again, today, open, we're down, what do you call it, 61, 62 points as we speak right now. Getting oversold on the stochastic RSI. And again, we're also seeing the sell volume kind of dropping down here. So yes, the volume itself is seller's volume, but eventually it's gonna, we're kind of running out of room down here before the machines start to pick up. The problem is why you're seeing this decline that we've had since the beginning of April. It's because the corporations are not buying. They are in the blackout window. We talked about this for a while. It's just it lines up with what we're seeing right in the charts. So that's something you have to keep in mind. That's why you're seeing very weak buybacks. However, with it being so oversold here, I have a funny feeling that there could be a bit of a bounce going into OPEX next week. And the reason I think that is because of earnings, and we can get into that right now. Earnings are coming up, Q1 earnings, and we know that Q4 earnings weren't great. We're already seeing some of the outlook for Q1 earnings and Q2 earnings, even that far ahead from some of these companies such as Adobe, is very dismal. They are not expecting, I think they're expecting the economy to be slowing down and some of their profits to be decreasing. They're not going to be making as much as they once were, especially not as much as 2021. And the reason I say that is because, well, if the market is going to sell off, it probably makes sense to get people when they least expect it. I think with everyone seeing how much the price is going down here, it's valid to say that there could be a bit of a squeeze in some parts of the market. You know, I can pull up Nvidia today, but Nvidia was down significantly and it was pushing down really pretty much at the 50 moving average. It was pushing that in the futures market and it bounced right back, right? You can see that the more the buying volume came in, because I think there is a bit of buying here. And again, you're above the 50 and you're above the 200. There's no reason necessarily for a lot of people to come in with shorts unless the market moves significantly. So when I'm seeing this, I think that there's a good chance that we could see a bit of a bounce over the next week or so. It's how long my time horizon is. I'm not saying it's going to happen. I think I'm just accounting for it. And if it does happen, maybe there are some plays I personally will make. But looking at this here with Nvidia bouncing back here after being down significantly, there's a few things we have to remind ourselves. One, this market definitely does want to sell off. They're eager to take profits. However, I think that there's a lot of people that are kind of shifting a little bit too far to the bearish sentiment, or maybe they're just going to the point where it's like their time horizon isn't properly adjusted for how this market could react in the short term. So when I'm looking at Nvidia, I could say that, we can say the same thing if we're looking at the NASDAQ. These 50 moving averages are coming into play right here. The Dow is an interesting one. That one is below the 50 moving average. So maybe it finds some support on it tomorrow, but right now it's losing support. So consistent closes below the 50 in the Dow, that's going to bring us down to this 200 on the EMA, which is going to be somewhere around 36.5, 36.6. For the NASDAQ, obviously, you continue to hold above the 50 moving average. You don't have to worry about anything down here. But if you start closing below that, we're looking at 16.2, 16.3 range, and then same thing with the S&P. If we look at this here, we broke out of this channel. I honestly believe that this is going to be a matter of time before we start to come down. My target for at least to begin with would probably be around 4,600 or so. After that, there's a lot of space in between here. There's all these gaps that we created on the upside that have never been retested. I believe that is, let's see how many there are. I believe there's 1, 2, 3, 4, 5, 6, 7, 8. 9, 10, 11, 12, 13, 13. And that's only when I stopped counting. And that was back in February of 2022. I mean, February 22nd of 2024. My bad, guys. But, we're going to see. That 50 moving average is definitely a target that it wants to come down to. But does it want to get there before OPEX? There's a lot of people who were getting squeezed on the move in the VIX today. And the VIX has been kicking ass once again, right? We were talking about this. It's going to coil up and it's going to break out at some point. But the problem is, a lot of people are buying this insurance pretty high. At the same time, I think that's also a lot of people that are covering. And we said it gets really worrisome when it gets above 18 or so, because that would break out of this channel that we've been kind of putting in. And if that's the case, then it kind of lines up with how these patterns play out. It's like lower highs, lower highs, lower highs, lower highs. And then eventually you get this rocket ship to the fucking moon for the VIX, right? March 2020. So it was putting in lower highs since February of 2018, lower high, lower high, lower high. You can even say the same thing. You can't really say it here. You can say maybe from 2020 to where we currently are. I think that's maybe the safe. You can say this, right? You can say something like that, but this is just blown out of proportion with it being the pandemic spike. But I do think that we are getting close to a point where we could see another spike, maybe not to this magnitude, maybe about half of it, but a pretty good spike in the VIX. And I think a lot of people are starting to bet on it. Even if the markets go up, the VIX might not go down as much as it possibly used to. But that's why we're going to keep an eye on this. But the earnings, I think, is going to be a reason why they could let this market rally. It could be the last rally before things could turn south. And again, that's just theoretical. It's one thing that could happen. You're closing above this 200 EMA, right? Usually when we get those golden crosses where the 50 crosses the 200, so it's coming in time, you get a bit of a dump. And that goes across for any asset. You always see a dump into the golden cross, and then the golden cross happens, and then you start to see explosions sometimes to the upside. And I mean, like explosive price action there. I'm not seeing it right now. I'm seeing it just hold that support. I would be surprised if the PPI data came in kind of contrasting the data that we got today, and that causes this to come down because I do believe that consumer prices are coming down. We're in an area of disinflation. The ISM data last week kind of hinted at that. I think that we're just blowing energy and housing out of proportion when we weigh this inflation data, right? So looking at this here, I want to see how this reacts over the next week or so going to OPEX. If we do see a bit of a crush, this could be a big crush. That's maybe where I'm going to enter. I might enter on the 50 moving average if it gets down that low, but between 14.6 and 14.16, that might be where I personally put in a bid to go long on the VIX or to short things that short the VIX, probably something similar to that. Reason what that would have been. If we look at the SVIXY, which is the trade that I'm currently in right now, again, this is just what I'm doing. When we look at these volume spikes that happen, you can see that. Let me get rid of the EMAs here. When a lot of volatility comes in a short period of time and people are caught off sides, you get something very similar to what happened here in February 2018, Volmageddon. Obviously, the market's learned a lot. It might not happen this way, but these short ETFs and these other ETFs where people are making easy money, once it's not easy money anymore and they kind of get squeezed out of their positions, guess what? They have to close those positions. And if you have the timing right, you could, see some of that benefit. I honestly don't know if this is even going to hit, but I'm keeping an eye on similar patterns to 2018, similar patterns to 2020. We're in a lot of very similar structural patterns. The question is there anything that could push us over the edge? Yes and no. Obviously, a black swan event, but it's something that you can't account for looking at the charts. So just staying vigilant. And again, it's managing risk, if anything, but that's kind of what I'm looking for in terms of maybe getting into the market. I'm very hesitant to get into the market regardless, though, because you see how volatile it's been. I will say this, though. If we look back at the S&P, they are buying it back a little bit here as we get into the daily close. I kind of like to see that because then it kind of adjusts for that scenario that I was just talking about, where they buy back the market into OPEX, VIX pulls back, and then potentially once OPEX is over, we have Q1 earnings. Might be some negative price action that could be coming because of that. Now, I say that also is because if we look at the stochastic RSIs, they're extremely oversold on the daily. They all look like they have momentum to the upside. And if we look at the weeklies, there's still a little bit of room to the downside. Dow is actually reacting better. The NASDAQ looks like there's some room to the downside, but the S&P has a significant amount of room to the downside in this scenario, and the price really hasn't came down as much from its top, which tells me that if there is some type of Volmageddon type scenario, obviously there's room for it to fall. And even more importantly, if we look at the daily, we're going to have to see how fast the stochastic RSI meter reacts to the price action if we do push up. If it pushes up fairly fast, then I'm kind of in the boats that we could be seeing this thing just get really overbought and it's a quick move to the upside. And then there is maybe a more sustained move to the downside. So just kind of keep that in mind. That's what we're looking at. And again, I'm not trading it yet. I'm not in the market. I don't really know if I'm going to get into that trade, but it seems like something that is intriguing me at the moment. But if we look at other things across the sector, the dollar has been kicking ass. I mean, look at that green candle. We were talking about this, how the dollar is breaking out, and on the daily, there's plenty of room to the upside, right? Now, I think this is if we're looking at this in sub-wave counts, this could be our wave 3, as in this was our wave 1, this is our wave 2, this is our wave 3, which means our wave 3 would probably be larger than our wave 1. So where would that put us? Maybe in the 107 territory. Maybe it even overextends in our wave 3 and we get to that 109. This is on the daily, though. This could take some time. You would kind of need things to line up for it to continue to rally. And I think that even if the equity markets do rally, there's a good chance that we could stay somewhat level before breaking out in the dollar. We're going to keep an eye on it. But here's the problem with the dollar rallying. And then, we found support on this line. Now it's breaking back up. Inflation's hot. Everyone's afraid. The problem is the debt markets. And we look over to Asia, and we got some bad news out of Japan because we know that the Bank of Japan is very scared about the yen losing value to the dollar. And right now, today, is the highest level that the yen is in terms of, I guess I should say, it's the lowest level the yen is against the dollar since 1990. That is absolutely, what, 34 years or so? Let me see if I can pull this up on the weekly. You can see it better. The last time that the yen was this high was back here in May of 1990. And if we do remember, that was during a major collapse in their equity markets. And we're kind of in the same scenario. They're raising rates, their yen is weak, and guess what? They're gonna have to sacrifice something to save their currency. Likely it's gonna be the equity markets. And it could even be the yen carry trade that we talked about since I believe July, August of last year. And if that's the case, then there's a good chance that we could see the yen and the dollar rally together because equities absolutely sell off globally. It's a very possible scenario. But, it's something we're just going to have to monitor. The dollar looks strong here. The yen looks weak. I feel like there's going to be some type of intervention, but you can't hold your breath to it. So we're just going to have to wait. I do want to pull up Asia as well. Other parts of Asia, we see that the HSI is rallying here. It rallied last night. Looks like it's trying to get back into this ascending triangle on the daily. You're getting close to overbought. Again, this to me this seems like it's a rally into that OPEX state. A lot of Chinese ETFs that we do have here in the U.S. So I wouldn't be surprised if they are buying some of this. But eventually we are getting pretty close to overbought on some of these assets. The HSI on the daily almost completely overbought. If you look at the weekly, it's completely overbought. If you look at the monthly, this is a different story though. Obviously, it's coming out of the oversold, but if we're not able to on the weekly keep pushing up, you're going to have to come down. You're going to probably retest this horizontal, or I guess this what do you call this hyphenated kind of, or dash line, this dash line here that's yellow. And if that support doesn't hold, obviously we're going to be in price discovery mode, trying to find where we can find some support. Next level would probably be fairly significant. And again, this could be over time, over weeks, over months, but it's about a 37% move. That's where your next level support is. The key thing is to see if this holds, but it doesn't help when we're seeing problems with the currency market in Asia. A lot of the money that was flowing out of China was going into the Nikkei, and if the Nikkei starts to sell off in order to save a lot of the, to save the yen, then we could have an absolute financial crisis amongst just currencies itself, and eventually that will bleed into the bond market. And don't think that the banks aren't safe from any of that, because they absolutely aren't. So just a couple of things that we had to go over there just to look at, see how these markets are reacting, because it is going to be really interesting to see how that plays out. And again, I think that we are weeks away from seeing some type of clarity, not necessarily significant price movement, but I think some type of clarity into where we really are in this market, because it is very confusing. You're getting conflicting data. Right, we're seeing inflation continue to rally, but we're also seeing oil rally, but we're also seeing consumer goods come down in price. Very confusing. So we just gonna have to take it day by day, see how things are playing out. OPEX, that's the key date next week. Also, speaking of OPEX, Bitcoin halving is literally the day after, I believe, or the supposed halving date is the day after. So we're going to keep an eye on that as well. It seems like next week towards the end is going to be a very busy week. I'm going to stop sharing my screen here, and I'm going to take a look at the Bitcoin funding rates. I have not looked at these all day, but I would assume with things bouncing in crypto a little bit, you can see how the rates are reacting, and it seems like people are still long. Yeah, we're seeing the red across the board. And this is on the current rates. Let's see the daily. Yeah, the daily rates are extremely high, about I don't know, 3 times maybe or so. Yeah, it's people are still long on this stuff, man, and that's not necessarily the greatest thing in the world. I think there is a scenario though where they could be right, and maybe we should have looked at the charts first. But I do think that leverage is part of the problem, but also we're in a structure where it kind of makes sense why people are going long. So to get their perspective, let me just pull up what that looks like and why I think that being long here for Bitcoin for the short term kind of makes sense. But at the same time, I personally wouldn't be playing the markets. I just don't want to be in this market for crypto right now because it's very problematic. But did I just share the same exact screen? I did. All right. Jweb, where are you? Let's pull this up here. Yes, this is what I wanted. Yeah, pull this up on the daily, and then we can take a look at this. And then we're going to wrap it up after this, guys. Go in more depth with a lot of data tomorrow, more news stuff. But yeah, this is what we were kind of watching. This was a double top, I thought. However, you put in a higher high here on the daily, and you kind of broke out, but then you broke right back in. It's this bearish engulfing candle into this pennant. Now the question is, we broke into the pennant. We're trading. Are we going to break out of it? We're going to find out. And it looks like around the 20th, the 21st, 22nd, right around that date is when this should expire. We get to the apex of this, and we have to, the market's probably going to decide where it wants to go. Honestly, I see this as a bullish pattern on the daily. I'm not bullish on Bitcoin at all. I personally don't have any position on it because I think the macro serves a lot worse than the short-term price movements in this. But this is a bullish pattern. We can't deny that. I think that there's a good chance that we could rally out of this going into OPEX, going into that Bitcoin halving. Euphoria goes crazy. Maybe this helps some of the Bitcoin ETFs, right? And then we get to a point where it's like, who the hell wants to be buying Bitcoin at $78,000 to $80,000? I'm sure people will, because that's the way it goes, and we see how leveraged people are. But that is just creating a pool of liquidity that's much further below. And if that's the case, honestly, I think it would be more rapid than it would be short term, right? Or I guess a slow grind to that level. I think within a week we could see that. Even in like 2 candles, we could see that push up there. It's very possible. Similar to how the prices moved here in February 2024 for this leg up from 52 all the way to 60, and kind of this period from 43 all the way up to 50. So that's what we're going to kind of keep an eye on. Obviously, Bitcoin isn't overbought, it isn't oversold. It's kind of in the middle right now. It was getting close to overbought, but it's not right now. So there could be some move to the upside. And again, we can see that the price is moving up as the volume is going down. Not necessarily the most bullish of scenarios, but again, we can't deny the fact that there are things out there that could impact the price. You know, both news and also just things such as stable coins that could definitely impact the price of assets. But I will say with the price today, dominance has increased a good amount from where it was, right? It went as low as 53.9. It's back at 54.41. Looks like there's some room to the upside for dominance. So if Bitcoin does rally, I think a lot of that comes from maybe the circulation of flow, or the flow of cash from other assets into Bitcoin. We can see it with altcoins. And I will say this with altcoins too. We look at the total market cap, very similar pattern to what Bitcoin is putting in. There is a scenario where this puts in a new high, right? With Bitcoin being part of the market cap, but you don't see a new high for this for total two, and you don't see a new high for alts in this entire market cap move. Maybe a local high, right? But I'm talking about like cycle high from this ABC pattern. It's very possible we don't get up there. It's very possible that we don't even come close to getting up here. It is very possible that we do break $3 trillion market cap. It could happen. I'm not saying it's likely. I'm not saying it isn't likely. I'm just saying it's more plausible that it happens here on the total than it does here on the total 3 or the total 2. So that's something we're going to have to keep an eye on. And the other thing obviously is going to be tether dominance. We are hugging this line over the daily. We know that over time it could coil to the point where eventually it's going to break out. And I think with the halving, we think we had the halving in April of 2020. Let's see. Where were we? April 2020. Different scenario, obviously, but yeah, see the prices up there. This is dominance. We had a bit of a pullback, it looks like, in the crypto market. So dominance increased. Just whenever we get on this line, it seems like we've had some pretty significant price movements to the downside for crypto as a whole. And it seems like this is kind of where we're building up towards. So that's why I think that volatility is definitely it's coming, it's incoming. The question is when, and that's probably the hardest question of them all. But I think we're going to leave it there. Yeah, it seems like they're reacting to the data pretty hard in terms of TradFi. Obviously, actually, they're buying it back a little bit here too. So wait till tomorrow. Let's wait till tomorrow to see how this reacts, and because, and I mean, like, let's wait till tomorrow before we start making accusations of where this market in the battle with inflation is heading, because I do think that we could get very different numbers from the CPI to the PPI. And if that's the case, then we might be in a very messy market. So Yeah, I think that's it for today. Obviously, keep watching the currency battle that's going on in Asia against the dollar. And it's not necessarily a battle, but it is something that Japan probably is going to have to come out and say tonight, because this is absolutely insane that it's just continuing to push up. And the dollar has no signs of stopping in terms of strength, especially with the equity market being so high. Again, maybe something comes out, maybe the PPI data brings the dollar back down, but you're broke out of this channel right here. Seems like it's going to be pretty reluctant to go back under it unless something catastrophic were to happen to the dollar itself, which I don't necessarily know if we can account for any black swans or anything like that. So I'll leave it there, guys. Thank you for being here. Apologies for StreamYard, no live stream today. Hopefully this helps a little bit. We'll be back tomorrow, normal time. If anything changes, obviously we will post it on Twitter. But I appreciate you guys being flexible, and we will see you all tomorrow. Stay safe and take care.